We go from honeybees to corn and soybeans now. It is that time of the show where we talk markets, and joining the show this week is Todd Hultman from DTN. Here's our conversation. Todd, I'm sure as you're a writer every day for DTN, you've come up with a lot of adjectives to describe the markets as you see them right now. Maybe an adjective or two to describe how you see the grain markets right now.
Well, the word that jumps out at me this week, Bryce, is derecho, a word that, we don't very often see. I never heard of before 4 years ago when it flattened the fields in Iowa, but it was another derecho storm that we dealt with this week. And I think that's maybe a good description of how hard the spec crowd has also hit corn and soybean prices this year.
Here in the middle of the week, corn and soybeans kind of continue on their trajectory where they're at, but wheat was a leader to the upside, trying to drag corn maybe along with it. What's the story in wheat right now?
The good news for wheat here on Wednesday, especially, we're seeing higher prices from a drier forecast for the northwestern plains and also the western Canadian prairies. And it looks like temperatures are going to get fairly hot the next several days, especially on the western end of that province. At the same time, Bryce, we had a US dollar break some significant lows here today. There's a little more excitement that there could be a rate cut finally happening in September. And so the market's pulling back the dollar. That's good news for grain prices and US commodity prices in general, but especially helps our wheat prices compete with those in Europe.
Okay, over to corn we go. Let's talk about the price action there on the futures market for corn. And maybe you brought up on your daily commentary as part of DTN, highlighting demand for corn right now when it comes to ethanol has been really good. Shed a light on that.
Bryce, it's been fantastic all year. I mean, our ethanol production level is up roughly 4% from a year ago. And of course, we're talking about making money with $4 corn, which is much easier for ethanol plants to do than they could a year ago when we had 650 corn. Just this week, we came out with a new report from the Energy Department, and we came within a whisker of setting another weekly production for ethanol. So the plant margins couldn't be better right now. It's helping hold up the basis for corn. We have a very strong basis nationally, but especially those prices in Iowa, where the ethanol bids are very active, is holding up very well on the cash side of things. We just haven't been able to convince the specs on the future side of the market of corn's good value.
Is that a pretty similar story when it comes to soybeans, Todd?
Yes, it is. And really, in fact, it's even more bullish for soybean demand when you look domestically, Bryce. The crush margins right now are in a situation where we've seen the soy products hold their values rather steady the past month, while specs continue to sell off soybean prices to their lowest levels in 3.5 years. That wide divergence has really made a phenomenal return for any processor that wants to buy soybeans right now, crush them, and sell the meal and oil. That spread based on August futures prices here on Wednesday was $2.36 a bushel. That's some of the best spreads the processors have seen since last summer.
Todd, I want to get to a viewer question that came in this week. Aaron had a question. Comes to the U.S. election. There's a lot of chatter on this front happening this week, really since the assassination attempt on former President Donald Trump. There's some assumptions out there that perhaps his re-election bid might be a little bit stronger at this point following the events over the weekend. To that point, Aaron's question was about what happens perhaps in the grain markets. What kind of indicators do the trade think might happen in the grain markets if former President Donald Trump is reelected? Your thoughts?
Well, I think the first concern that everybody has is what's our relationship going to look like with China moving forward? And of course, we recall his first term, and we had quite a tariff battle with China at the time, and they really held back on buying soybeans from us. And of course, we're still quite dependent on soybean exports to China. I will say, no matter who is elected, that's still going to be a concern moving forward. And even though Brazil continues to increase their production year after year and send more of those soybeans to China, China still is not in a situation where they can do without us completely. I mean, to get through the year, they still need US soybeans. So that's going to be a contention. And as I see it, really, no matter who the president is on that side. The other concern, I think, and impact that this election could have is going to be on the biofuels market, Bryce. And that's where I think the farm community should have some concern or at least raise questions about the policies of both presidential candidates here. President Biden has pushed a very strong green policy, but quite frankly, it seems a little out of touch with the reality of the moment. We still need strong oil and gas production to get us through the interim. And frankly, our corn and soybean representation wasn't very strong when they came out with the SAF guidelines. On the other hand, President Trump seems to be very strong pro-oil, but has had a mixed record on supporting the biofuel advances that we've seen recently. So there's a lot of things to chew over, and I'm going to let folks decide for themselves. But when it comes to farming, we're still going to have a tough road ahead. And here's the key point I need to put out there, Bryce. No matter who is elected, we continue to struggle with continuous expansion of corn and soybean production from Brazil. And that is not going to stop no matter who's elected. And that's what we really need to be focused on as far as protecting our ag profitability.
Interesting perspective. I appreciate you bringing that here to the forefront of the conversation, Todd. Never enough time to discuss everything that's happening, but just want to throw this out there, particularly for corn and soybeans. Do you think we might be finding a bottom here at these prices we're observing right now in the futures?
I absolutely do. And I'm very encouraged in soybeans, not by any price action I've seen yet. It still looks horrible when you look at the chart. But our September FOB prices at the US Gulf are now about 40 cents a bushel cheaper than those in Paranagua, Brazil. That's happening fairly earlier than usual in the season, and it leads me to suspect that China's going to need to start buying US soybeans here fairly soon, and definitely by the time we get to fall. So I think we have a very strong demand case to scare some specs out of their short side on the beans. And on corn, it's just overdone. And I don't think the production is out there that USDA is estimating yet. And the problems aren't really going to surface in reports probably until September, may not until November. So it's going to be a real question mark what kind of production we have this year.